For the latest in strategic affairs, subscribe to our YouTube channel. Click the bell icon for updates.
Hello and welcome to another edition of Capital Calculus. This is the show that examines policies and developments through the intersection of politics and economics to share a fresh perspective with you every week, especially in trying to unpack the underlying strategic imperatives. I am your host, Anil Padmanabhan. The Reserve Bank of India is poised to write a new chapter in the rapidly evolving payment story of India. It will very soon launch the digital rupee as a pilot project. It even has a moniker. It's called the eRupee. But what will be its form and shape? How will it be different from a physical rupee? What are the underlying promises and potential? To understand this and more, we spoke to Mihir Gandhi. He's a partner at PwC, and he also co-authored a white paper on the central bank digital currency, or the eRupee as it is called. So I began with the obvious. What exactly is the eRupee?
So CBDC is essentially a digital currency which is backed by the central bank, and it is a sovereign bank digital currency which gives the citizen and the holder the right to kind of transfer the money for availing different services and also for remittances to the friends and family. So it's a central bank digital version of the currency which typically exists in lieu of physical cash or physical currency.
You heard Mihir. In its current form, the rupee as we know exists as this. But very soon, it will acquire a digital avatar. You won't be able to see it, you won't be able to feel it, but you can use it. We get that. But why are central banks world over rushing to launch a central bank digital currency? At the moment, 80 central banks have either launched a pilot or are poised to do so.
What is happening is that central banks have realized that there has to be a kind of equivalent of digital currency for the physical notes, coins, etc., that they have been printing or distributing in the country. One of the key reasons for that is to reduce the cost of managing the entire cash currency in the economy and to reduce the impact of what the cash will have in the economy. So if you have digital currency, then it can be issued digitally, it can be stored digitally, it can be transferred digitally, and there is also security of the currency because it can be traced, and the hacking and all can be reduced and very very minimal in that aspect.
One takeaway from what Mihir just told us is that a central bank digital currency or the e-rupee will be a dampener for counterfeiting, which, by the way, is an industry in one of our neighboring countries.
So it will also help to kind of battle what we say the counterfeit notes or the currencies that we see today, where it can be printed and it can be done in a different way. So if we have a digital currency, then it can be traced, the issuance can be traced, and how it travels across the entire ecosystem can be managed and looked at very very clearly. So I think that's the another key impact.
But will it also work for cross-border transactions? Say, for expats to send remittances home or for importers and exporters to pay for their trade invoices?
I, as a country, can enable my citizens or my companies to transact globally by paying through the central bank digital currency, which can be easily accepted for a dollar to rupee or a dollar to euro or euro to rupee kind of conversion. And I don't have to be dependent on different international networks like Swift, etc. So CBDC is instant. The conversion rate is known, and it's a finality of transaction.
Will this then accelerate the process of globalizing the rupee. In other words, the rupee will be used like a currency to trade in as an alternative, probably even to the dollar.
Definitely, I think it will move cross-border payments to real time. There will be predetermined kind of exchange rates where digital dollar will have which a digital rupee, which will be similar to the normal exchanges that we have. It will help in internationalization of the Indian rupee, yes, for sure. But one needs to also understand how it will impact the existing payment rails and them going international. So if UPI is going international, then how does the CBDC of Indian rupee also move along with them, right? So I think those are some of the things which we'll have to wait and see. And for example, in a country where UPI has gone international, but CBDC is not prevalent in that specific country, but it's present in India, then how will that exchange happen? Then will CBDC be allowed at all, or will it happen from a normal currency or a coin in that country where there is no CBDC? It will be converted by the UPI platform to a digital currency in India and then sent as a digital rupee to the Indian customer. So we'll have to wait and see how that interlock or interplay between the existing payment rails and the digital currency of CBDC will be happening going forward globally.
If we take a step back, we will figure that broadly the e-rupee is nothing but a digital alternative to the physical currency. But there are some differences. In the e-rupee, the RBI directly backs it. Secondly, its digital avatar ensures real-time settlements. So, effectively, the rupee mimics the physical currency, but its USP is clearly frictionless transactions.
Yes, that it is one of the key reasons why CBDC is being issued. But if you take a step back and see what is happening in the Indian context, we anyways have more or less frictionless transactions where we have a UPI and mobile wallet or mobile app through which we normally transact for our day-to-day purchases, remittances, etc. So in our context, maybe not that may not be the biggest USP of CBDC, but a biggest USP of CBDC in our context is twofold. One is it is able to kind of make payments for specific purposes. So there is a use case based approach where if a government wants to transfer subsidies to the citizens, which are it would have done traditionally to the bank accounts and trace the bank accounts and said that only once the transaction is completed then I will make the payment. And if the payment or if the beneficiary account is not active, then it has to take back the money from the central bank that kind of from the key bank, that principal bank that does the subsidy. So that was a traditional way of doing it. But if you do it through CBDC, then the entire payment can be traced. It can be tracked. The programmable payments, as we call it, can be done where I am giving money to a specific person only for using at a particular education store or buying fertilizers or LPG or whatever we call it. And if the money is being unused, then the CBDC has an option to pull it back to the government account and through different mechanisms. So I think in Indian context it will be slightly different where programmable payments will come into play as one of the biggest USPs. And second is for cross-border remittances for India going forward, which is a substitute to SWIFT, as I mentioned earlier, which Indian government and citizens can look forward to.
Wow, you heard Mihir. The e-rupee is programmable because it's a digital currency, which means if it is used in direct benefits transfer, as Mihir told us, it will completely change the business of DBT. At the moment, the Union government has transferred upwards of rupees 25 trillion using DBT, and thereby it has prevented leakages. The savings to the exchequer are somewhere around rupees 3 trillion. Once the e-rupee is introduced for DBT, these will be eliminated.
Yes, the idea of DBT can be taken to another level altogether with the usage of the CBDC because it is programmable. It can be used for specific type of payments only. It can be traced, it can be tracked, it can be understood who's using what, and the leakages that typically happen even today, right? Even with the digital bank accounts, even with the digital kind of money, can further be reduced and made almost zero.
Another collateral gain from the e-rupee, especially if it is used for international transactions, is that it will reduce India's dependence on Western payment gateways like the SWIFT. This is a very smart move strategically because, in the event of a conflict, the Western countries will shut down these payment gateways, as we have seen it happening with Russia following the sanctions being imposed on them.
That's absolutely right. I mean, because what is happening globally and world over with the different sanctions, people no longer want to rely on specific kind of countries for their global payments, trade, etc. So I think the idea is to have our own digital kind of currency. So international remittances, international payments can be done very, very efficiently and without much dependence on a Swift or other kind of global kind of networks that typically exist uh, globally. Also, CBDC will have instant finality of transactions. The currency rates will be known, so it's very, very fast compared to the traditional networks of international remittances.
Obvious question then, is the era of cash drawing to a close?
Cash drawing to a close in the Indian context, I don't think so. Cash will always be there. What we see is that CBDC will be introduced shortly, but the traditional currency, traditional coins will still continue to coexist at least for the next 5 to 10 years, right? That's what we are expecting. There also has to be interoperability amongst the normal bank accounts and the accounts of CBDC of digital currency which will be issued. So, if, for example, in the discussion paper, it is proposed that for retail customers, there's going to be a token-based CBDC that has to be interoperable with the traditional bank accounts, which you and me as a citizen or a consumer hold. So, and if that is interoperable, then I as a customer can still withdraw cash, I can still manage cash, I can hold cash. So, uh, I would say it's not drawing to a close. Maybe it will reduce, but cash will still very much be there at least for the next 5 to 10 years, along with other payment forms that we have today.
So cash will continue to coexist with the rupee. But what about commercial banks? Do they need to brace for another round of disruption?
Yes, definitely. I think this is a disruption that banks will have to deal with, as we have seen in the discussion paper. It is proposed that there has to be a intermediary model, which is a two-tier model, but central banks will issue CBDCs through the banks. So the banks will have to be geared up for the technology, will have to understand the design principles, the technology considerations for rollout of the CBDC for India, both separate, which can be separate for retail and for a wholesale or a business, and that has to be factored in and incorporated by the banks. Uh, and that is a key kind of challenge which we will have to face to implement the CBDC. One is the readiness of the ecosystem participants, and second is the education and awareness of the citizens like you and me to understand what is CBDC and help them to use it very effectively and make them comfortable that this is same or similar to RBI backed currency or coins that we have today.
It is amazing how quickly India has gone from checks to NEFT to IMPS and UPI. In that sense, the e-rupee is yet another iteration in the future of money in India.
Yes, I think is this is one more iteration to the future of money because you know we have to look at it in two parallel kind of ecosystem, right? One is your currency and cash and what you do on top of it in terms of the overlay of UPI, cards, bank accounts, etc. And second is the digital currency that will be issued, where existing payment platforms like UPI, NEFT, IMPS will have to align themselves to the CBDC networks. So today, for example, UPI may not be in a position to integrate or link itself to a distributed ledger technology platform. However, going forward, it will have to kind of integrate itself very, very fast, because that's the way consumers, you and I, kind of prefer. So I think that's how what we'll have to wait and see how the design principles emerge further, and how the technology will have to be adopted by banks, by central operators, and by the regulator going forward.
So far, the story seems to be a win win. Yet, I was curious about the downside risks.
The big downside risks, for the launch of CBDC, I already spoke about. We spoke about the tech upgrade, the tech infrastructure that will have to be done not only at the central bank level, but also at the operator banks, and also the the other payment wallets, etc., that are offering this. The second key downside being the retail customers' education, awareness, comfort, that they start using this, keeping their money in CBDC accounts, tokens, wallets, and not immediately transferring to the digital, to the normal bank account or normal currency mechanism. The third downside could potentially be how we are able to manage the entire banking ecosystem. The principles have to be very clearly laid out, right? So, if there are certain policies like a CRR and SLR for a bank, will the CBDC deposits be part of it? Yeah. So those are some of the questions that we have to answer. Will they hold interest? Will they have interest bearing capacity? In the discussion paper, it said no, but we'll have to see how that pans out.
What about cybersecurity risks?
Not so much, hopefully, because the platform that will be devised will be very, very secure. It is already based on a distributed ledger technology or central technology. Yes, we have seen cyber attacks of that also globally, but it is very less globally compared to the normal payment infrastructures. And in India, if you look at the payment infrastructures themselves, are so secure. They are very, very less as a percentage compared to the overall transaction volumes and value that we see globally. So we are already in a much better position from a cyber vulnerability perspective. With CBDC coming in, it will further strengthen the overall kind of confidence and help consumers adopt faster.
Mihir then is giving a clear thumbs up to the eRupee. Indeed, throughout the conversation, the one big takeaway that we have is the immense potential of a central bank digital currency or the eRupee. In 1984, a little car called the Maruti taught us how to drive. Less than 10 years ago, UPI showed us that there is an alternative to cash. Now, the eRupee, with its guardrails that ensure secure, frictionless transactions, is promising to raise the trust quotient in the Indian economy, which is an absolute ingredient for a emerging market economy like India. Thank you for watching. Do subscribe to Strat News Global. Hit the bell icon so that you don't miss any updates. And do share your feedback and insights with us. You can reach me on Twitter at Capital Calculus. And I'll be back next week with another episode of Capital Calculus. Till then, stay safe.